We find the greatest value in what we do in the relationships we create, in the connections we make, in the bonds we form, in the trust we're given. Trust that strengthens our relationships. Trust we work hard to keep. Trust that inspires us to do what we can as long as we can, to lead in building the economy, serving people and their communities, providing the assurance of security and stability they can count on, whatever happens. This is why, in these difficult times where people crave even more connection, we are inspired to work harder at nurturing these relationships. In a time of uncertainty, we build lives together by banking confidence through continued service. In a time of worry, assure we bank on our excellence and attention to health and safety to offer assurance through our care. In a time of fear, we shine a light on the future and encourage them to face it with a smile through meaningful assistance. Because everything we do at Metrobank is for those who have trusted us with their lives, their hopes, and their dreams. It is a commitment that whatever happens, in good times and bad, we are invested in their lives, making sure they're in good hands. That is what we mean by meaningful banking, because those connections are what mean the most to us, and we are committed to making them last.
Happy New Year. Welcome to Business World's first virtual one-on-one interview for 2021 with policy and decision makers. We are approaching a year into the pandemic, and while a vaccine rollout is within sight, the pace and trajectory of economic recovery is anyone's guess. One key institution at the forefront of this ongoing battle is the Bangko Sentral ng Pilipinas. What factors are authorities watching that could shape monetary policy in the months ahead? Joining us today to shed light on this matter is the Governor of the Central Bank, Benjamin Diokno. Good morning, Governor.
Good morning. Good morning to our televiewers.
Well, let's start with this. Nearly a year into the pandemic, what have been your key realizations and lessons as the country's chief monetary authority and also as an economist?
Well, as you know, I've been in public service for almost half a century, and I've seen many crises in my lifetime. But I'm fairly new to this job, being the central head of the Central Monetary Authority. I'm a fiscal guy or public economics guy. So in the previous years, I observed both as a say budget secretary and as professor of economics. I've seen that whenever we have a crisis in the Philippines, we run out of dollars because we have huge foreign debt, and which we are going to service. So we run out of dollars, and because we don't want capital exiting the country, we raise interest rates. So those two deadly combination, peso depreciation and rising interest rate. You remember the Jobo bill, interest rates went up to as high as almost 50%, and that characterized many of our crises. So having said that, I thought that given our past experience, I'm prepared for the job. But you know, this, as I said, I'm fairly new to the job. It's like a baptism of fire for me. So, but I also look at other countries, and whenever there's a crisis, you got to make sure as a monetary authority that there is ample liquidity into the system. You don't want to choke the industry so that it's going to be more difficult to lend to enterprises and to corporations, and that rather to enterprises and to consumers, and that will of course exacerbate the problem. So our first concern when given the pandemic was to look at what the problem really is, and basically it's a health crisis, right? The health crisis. So you will really have to pay attention to solving the virus. But there's no solution there yet. So we have to look at what other countries are doing. So we want to protect lives, first of all. So the government actually imposed a lockdown. And at the same time, you have to, of course, because of the lockdown, the economy, as you know, contracted by severely in the second quarter of last year, and then wait for well, I imposed the health protocol, so save lives, save livelihood, and that's where the amelioration program came in. And so, and then, as I said, we're slowly opening up the economy, and we're confident that the economy will, while it will contract this year, and that's also true for the whole world. I think the economy is now, we're behind, the crisis behind us. We look forward to a stronger economy this year. We expect the economy to grow by 6.5 to 7.5, and an even stronger growth in 2022. Of course, our desire to cut poverty level to 14.5% by 2022 was disrupted, but I think that goal is still on the table. I think that's still doable if we recover next year by around 8 to 10%.
Well, thank you for that comprehensive overview, Governor. You did mention at the start of your remarks that the peso depreciation was one of the risks in the past crisis, but except in the past few days, peso has been on an overall strengthening mode, and some quarters hope the BSP can be more aggressive in helping curb further appreciation through market intervention. Your comments, especially amid a crisis like this one.
The BSP, as a matter of policy, does not target a particular level of the peso. It's determined by the supply and demand mechanism, and we, of course, early on we have adopted a fully flexible exchange rate. And it has helped us actually in many ways, because then it has allowed, we let the market determine the peso. And as a result of that, it does not create a lot of problems for us. For example, as a result of this exchange rate policy, we have the highest gross international reserves ever for this country. It's now around more than 100 billion US dollars. We're looking at maybe 110 this year, and even 120 billion US dollars next year. That is equivalent to close to 1 year's import requirement. The receipt doctrine is if you have a cover, a foreign exchange cover of 3 months, that's enough. That's good enough. But we have more than that. We have more years of cover of our imports requirements. So again, this is a major departure from previous crisis, when we have to, in the past, we have to scramble and look for the dollars to pay for our foreign debt. And this year also, during this crisis, when we started the crisis, our debt to GDP ratio was in the neighborhood of less than 40%. That's a good number compared to other countries with debt to GDP ratio of around 100, 200, even 300%. So and so we don't have to increase our interest rates to protect the peso. In fact, we cut interest rates by 200 basis points. And so that's again a major departure from previous crises.
Yes, Governor. So the bottom line is to have sufficient forex reserves to back up whatever we need to respond to the crisis.
Correct. Mm-hmm.
Let's zero in on the banking industry. How did the pandemic affect the rollout of reforms for this industry, and what does the reform lineup look like for this year into 2022?
We learned our lessons from the Asian financial crisis. So we adopted a series of reforms which actually helped us during this crisis with respect to the banking community. The banking industry is sound and well capitalized. In fact, it's what's called capital adequacy ratio is hovers around 15-16%. That is much higher than the BSP prescribed 10%, or even higher than the internationally prescribed 8%. So and that is a result of that our lessons from the Asian financial crisis. We have a stronger and better capitalized banking industry. The non-performing loan is in the neighborhood of maybe between 3 to 4%. That's manageable and significantly lower than the peak during the Asian financial crisis of, if I remember right, 17 to 18%. And that's a plus for our banking industry. And as a result of several measures that we adopted early on, we are one of the earliest to respond to the crisis as early as February. We cut interest rates by 25 basis points, followed by 50, another 50, another 50. So total around 200% basis points or 2% interest. We also cut the reserve requirement, that amount of money that banks are supposed to deposit with us, by 200 basis points. In fact, the monetary board gave me the authority to cut the reserve requirement by 400 basis points, or around 4%. And as you know, for every 1% point cut in the reserve requirement, we release into the system 100 billion pesos. And this has helped calm the market, that the government is fairly aggressive in making sure that there's enough liquidity into the system. And while the authority is given to me is 400 basis points, we decided to cut only by 200 basis points. So there's still a 200 basis points authority for me to do what I want to do at a given time. Okay, so this, of course, is consistent with my desire, in fact, even before the crisis, to reduce the reserve requirement from, at that time, 18% to single digit by 2023, the end of my term. And so with a series of other measures, for example, one measure that is addressed to the micro, small, and medium enterprises is that any additional lending to the micro, small, and medium enterprises will be counted as part of their compliance to the reserve requirements. And that has actually helped a lot of micro, small, and medium enterprises. So that, to me, is an innovative approach that has not been done elsewhere. So in sum, we have a total of measures equivalent to 2 trillion pesos. We released about 2 trillion pesos into the system. That's about 10% of GDP. And I think there's a general consensus that we have done well. And so this will carry us on to this year and next year. And hopefully by middle of next year, we'll be back to where we were before in 2019 by the middle of 2022.
Well, the BSP has tightened and widened its monitoring of the health of the industry. I understand now to cover all BSP supervised entities and not just universal and commercial banks. Bad loans have been rising, but they are within acceptable bounds, and bank buffers have been more than adequate so far. So what will the central bank be watching out for this year that could affect this picture of bank industry stability?
Well, we continue to do our surveillance work, and of course, the banks continue to submit reports to us. And so we look at all the metrics, like as I mentioned, the non-performing loan ratio. We look at the capital adequacy ratio. We look at the links of individual banks to their major conglomerates that they are lending to. And so we continue to look at the individual banks, and we look at the industry as a whole. And I just came from a meeting with our staff together with some monetary board members, and look at all the each individual bank and see whether there are problems that are emerging. And so we are actually proactive. We do our surveillance work, and we do stress testing and scenario analysis, which will enable us to determine the true status or health of the financial system.
Yes, Governor, you just said that you just came from a meeting with your staff. Have you seen any emerging risks or problems?
No, we get this report on the industry, and I said I think it's a good idea to look at the micro or the granular data, and so far we don't see any emerging problem moving forward. We're also optimistic that this bill, the Financial Institution Strategic Transfer Bill, or FIST Act, which is now pending in the Office of the President, will help the banks further. In fact, our analysis is that it could really significantly reduce the NPLs should this pass. The FIST Act is just a fallback position in case of a worsening of the situation, but we don't see any situation worsening at this time. I think even without the FIST bill, the banking industry can handle the current crisis.
Okay, well, let's now go to the wider economy. Fitch just last Monday affirmed the Philippines' investment grade credit rating. At the same time, in the same report, it said it is watching out for any, and if I may quote the report, failure to resume historically high economic growth rates after the coronavirus shock subsides, reflecting structural economic damage from the crisis. First of all, fourth quarter and full year 2020 GDP will be reported later this month, January 28th. And yesterday, you did say, I think it was in a forum, that you expected, quote, solid growth for the fourth quarter. Now, how solid is solid? Will it be even better than the first quarter's negative 0.7%, the contraction then? I mean, if you can give us your expectation.
The first quarter contracted by around 0.7%, right? Our revised estimate, when I say ours, the national government's revised estimate, and this was confirmed by the Development Budget Coordination Committee in its meeting last December, is that the full year performance of the economy will be in the neighborhood of 9.5 to negative 9.5 to negative 8.5%, or let's say midpoint 9% negative. We know that for the first 10 quarters, the economy shrunk by 10%. So that means that the fourth quarter performance will be much, much better than the first three quarters. And that is as a result of the very long and very strict lockdown that the government has put in place in order to save lives and to build up the capacity. Now we're very comfortable with our health capacity. I think it's below the capacity. And we are ready in case there's a surge, although we do not anticipate any major surge. And that in any event, I think there's been a policy decision that should there be a surge in the health crisis, we will just impose regional or localized lockdowns now rather than the general lockdowns, because that is really very expensive on the part of the economy. Now, we expect that with the vaccine, which will come in maybe second quarter of this year, that the economy will, well, first of all, it's the new data for, or new prognosis for this year is that the economy will grow between 6.5 to 7.5%, and that the economy will grow by a strong of 8% to 10% in 2022. This revised projection is based on the assumption that the vaccine will be introduced into the country on a massive scale by the first half rather, by the first half of 2022. So anytime that is introduced much earlier is a plus for the Philippine economy.
Oh, yes. Now, we just have a comment from one of our viewers, Janina de los Santos Ross. 6.5% GDP is too high for this year. Pre-COVID, our GDP was 6.2%. I understand 6.5% is the lower base of the target for this year.
Correct. Mm-hmm. Well, first of all, you have to look at what happened in 2020. You have a significant decline in the second quarter. So we expect that by base effect, we will have a very strong Q2 this year. And knowing the pent-up demand of consumers and businesses, I think, and the Filipinos' propensity to observe the Christmas season, that's quarter four, I think we're fairly confident that we'll have a very strong Q2 this year and an extremely strong Q4 this year. So that will add up to the 6.5 to 7.5. As you know, the build is now on stream. Many projects that are done not only by the government but also the private sector are being completed, and it continues to be done in all parts of the country. And so with the build program and the early approval of the 2021 budget, then the government can even front load the disbursement of that budget. That's about 4.5 trillion pesos. What I mean is they can front load the expenditures for infrastructure to coincide with the weather pattern. You know, the first half of the year is usually the dry season, so that's the best time to do all these projects. And the second half, that's usually the wet part of the season of the in the weather pattern. So if they front load the disbursement, that will be a big boost. Also, local governments can help. You know, their internal revenue allotment for this year is approximately 1 trillion pesos. So if they want to do their own pump priming, they can do so.
Well, growth this year, understandably, will be riding on a very low base in 2020. But for next year, I understand the target is 8 to 10%. That's quite high for 2022. Is that still part of lingering base effects? I mean, what will drive 2022?
Yes, so there's still the lingering base effects. As you know, from 2019, we went into contraction. So, and as you know, before the crisis, we were growing at around 6 to 6.5%. And so with the build program of the government, which has been there before the crisis, and with the recovery in the world economy, so our trade will pick up, and I think we expect the overseas Filipino remittances to be also pick up significantly in Q this year and next year. You know, there were predictions because of the crisis that overseas Filipino remittances will contract by as much as 20%. It didn't happen. Given the resilience of our overseas Filipinos, the overseas Filipino remittances shrunk by only 0.9% last year. This means that this supports the view that the overseas Filipino remittances takes the nature of an altruistic gesture by Filipinos working abroad to help their families here who are in trouble, and so that they continue to send money to on a big scale, so that the overseas Filipino remittances contracted by only 0.9%, despite the prediction that it will shrink by 20%. So we expect that that as we send more Filipinos abroad, hopefully we change the nature of the composition of the OFW workers, maybe more nurses, more doctors, more IT workers, etc. Then there will be a higher OFW remittances in the years to come. It will expand by 4% this year, that's our forecast, and by even higher percent next year.
Well, we'll be, among other things, you'll be having national elections in 2022.
Correct.
Will
That's the other.
elections be of any significant help?
Well, historically, every election there is a 0.5 to 1% higher than the base. So if you factor in the 2022 election, that would mean higher growth for the Philippine economy by, as I said, compared to the base by 0.5 to 1%.
So that was assumed in the 8 to 10%.
Yes, probably yes, but also it also carries with it still the base effect. Pent up that was suppressed as a result of the pandemic.
Okay. One other question from a viewer. This regards the tourism industry, which has been hard hit. What is your view of the Philippine tourism industry in the context of input-output analysis?
You know, the Philippines is lucky that we're not really heavily dependent on imports income, or rather tourism income.
I think we've had some
like Thailand or maybe even Singapore, but we have a very strong, right now I've seen it, strong domestic tourism. So of course foreign tourism will still be weak by 2022. I think that's the general consensus, and I think people should disabuse their mind that we will go back to the old normal. I think anybody who thinks that we'll see the old normal is illusory. I think what the right thing to do is have a vision of what the new normal is and adjust accordingly, and so as quickly as possible. So you have an economy that is highly digitalized. It's a contactless economy, less contactless, or rather more contactless. The way to shop, the way we live will be different from the old normal. And so the sooner we adjust to the new normal, I think it's better for the economy.
Well, a number of analysts see the Philippines, we've seen the very high target for growth next year, but some analysts say the Philippines is among those most vulnerable to long-term impact from the pandemic, in terms especially of small businesses and jobs lost and still being lost. Moody's, in its latest report yesterday said the economic fallout will endure beyond the initial recovery. How do you see such long-term scarring affecting growth beyond 2022? Where will it be seen?
You know, I'm optimistic of the future of the Philippines. In an aging world, right? The whole world is aging. Europe is aging. Japan is aging. China is aging. We have a very young population. young population. The average age, or rather the median age, is 24. If we train them in a new digitalized world economy, I think we'll be ahead. If we train them, give them good education, give them take care of their health, and give them the necessary training. So you have a young, tech savvy, English speaking people in a different world. That will be your asset. That is the ace in our sleeve. So let's not be pessimistic about the future. I think we have a nice future.
Yes. So a related question from one of our viewers. How long does it take for the Philippine economy to boom again, given the fact that more people are jobless?
Yeah, as I said, our target is that by the middle of next year, 2022, back to where we were in 2019. And so by that time, our unemployment will be maybe in the neighborhood of between 5 to 7%. Okay, that's where we were before in 2019.
Okay. Still another question before I go to my own questions. What sectors do we expect to recover the fastest this year, and why? Aside from the vaccine, what other factors do you see playing a significant role in reviving our economy this year? You noted last May that the BSP put in place policy measures aimed at encouraging more lending to MSMEs. Have you seen how many MSMEs were helped through these measures, and how much these have helped them? That is the question.
I don't have the exact numbers right now, but I know that between April to around November, the lending to micro, small, and medium enterprises rose by 1,400%. Okay. What will be the drivers of the strong growth in this year and next year? As I said, the early approval of the national budget, that's one. And if it is appropriately implemented, in other words, I would even argue that it should be front-loaded. And weather-wise, I think the prediction is that there will be a mild La Nina, so that's good. And of course, our Build program, not only the national government's major projects like all this South Link, also the subway is on stream. The infrastructure that will interconnect the whole archipelago, the whole Philippines, is on stream. For example, I just came from Baguio. It now takes only 3 hours to get to Baguio because of the NLEX, SETEX, and then TPLEX, and there's more improvement to the Visayas and Mindanao. There are lots of projects going on also in Mindanao, and so all this will actually create a lot of jobs, and then which will then create economic activity worldwide.
Well,
nationally.
Well, we started this session with a question on reforms in the industry. I understand some of the reforms were aimed at securing or facilitating digital payments. So we have two questions here. Given the increasing trend in use of digital payments in the country, should there be less production of Philippine currency? And the second question, do you think the Philippines is ready to be a fully cashless society?
Before the pandemic, my vision is that we will shift from cash-heavy society to a cash-light society, and so and also that part of that vision is that 50% of all transactions by the end of my term, which is 2023, should be in digital form. And that 70% of all Filipino adults should have a bank account. I think the pandemic has actually accelerated that vision. Okay, so we'll accomplish all these objectives much sooner rather than later. In fact, talking of cashless society, maybe not within my lifetime, but I can assure you maybe a coinless society by 2025, for sure. But because that will be replaced by the QR code PH, which we are pushing to get our national ID. As you know, the central bank is responsible for printing the national ID, which will have a QR code at the back. And that will accelerate the use of maybe for small transactions, you can use that. So I'm very optimistic that the future will be digitalized, that there'll be less contact in the way we live, in the way we play, in the way we operate. Okay, so yes, digitalization will be one of the major beneficiaries of this pandemic.
Yeah, on another matter, another viewer is asking this regards, can we have a streamlined process for banking requirements? Philippines is lagging behind neighbors where you only need one ID to open a bank account and no other ridiculous, I'm just reading, ridiculous documents needed. Your comments, please.
Yeah, there used to be requirements that you have two nationally issued ID. That will be replaced by just one, which is the national ID that we are printing at the BSP planting complex. So it will be streamlined, and we will make it. We are actually working hand in hand with Land Bank of the Philippines. That as you get your ID, they will open an account for you right away. So we are streamlining the opening of bank accounts. And in fact, not many people know this, but there's a so-called basic deposit account where there's no required balance, it does not expire, etc. And so it's very good for small transactions. Okay, so if you go to our bank, you can ask for this basic deposit account, and you can open it. And that is also very useful, especially during these times when you need assistance from the cash transfer from government. And so we are actually moving double time, triple time to digitalize the whole government operation. You can now pay your taxes, fees to the BIR using digital means. Okay, so we are streamlining operations.
Still another question from the audience. What are the other initiatives in terms of reducing transaction costs by the BSP to encourage a cashless society? Should we remove fund transfer online payment charges by commercial banks?
That's still okay. That's one of the major beneficiaries of this pandemic. We asked the banks to waive the finance charges, and that was waived. That's for InstaPay and PesoNet. The InstaPay for small transactions, PesoNet for large transactions, and some of the banks still continue to waive charging of fees, and for those who have restored the fees, they actually they cut the fees. So it's now more convenient for people to transact financially with the banks just from the comfort of their home. They don't have to go to the bank to have a face-to-face transaction, just through the internet. So, but that means that we have to ramp up our investment in infrastructure on telco, and those are one of the winners in this pandemic, and that's also one of the reasons why we're optimistic that heavier investment now in telecommunications, that will also help increase the economic activity. Our Build program, the national government's Build program is build plus, meaning plus infrastructure investment, plus investment in health facilities. So those are the improvements on the Build program.
Governor, you did give us a summary of monetary policy moves so far. But a number of economists have remarked that the BSP may have cut the benchmark rate too much too soon last year, eroding the effectiveness of this policy tool. And Fitch just last Monday, for example, said that with the policy rate cut by a total of 200 basis points, the space for further reductions is very limited for 2021. Now, you have said many times that the policy will remain accommodative till next year, but have policy rate cuts run their course?
Well, you can never be exact or perfect in the timing, okay? But it's better to err on the being ahead of the curve rather than behind the curve, right? So it's nice to second guess what happened, but I think the general consensus is that we did the right thing. And I think there are those who are saying that we did the right thing, maybe overshadows those who said we did it too early. It's never too early at this time because the pandemic is not yet over. In fact, our policy stance is that we will keep this policy for long until such time that we've seen the economy growing at the same pace as before, at around maybe 6 to 6.5%, and unemployment at around 5 to 5%. So no, I do not apologize for the speed by which the central bank acted, and I think it was a success. It calmed down the market, and it reduced the borrowing cost for businesses. It reduced the borrowing cost for the national government. I haven't seen this kind of interest rates in my lifetime.
But what will determine the pace of cuts for this year?
Well, the policy making at the BSP is always data dependent. So we look at all the external and domestic data that we have. We have our own models. We have models that look at the past. We have models that look at the future, and we have what's called the nowcast. What's shown by what's happening at the moment. So we look at all these things, and in order to make a decision, we meet for policy purposes every 6 months. So our first policy meeting for this year is, I think, on January 18th. So that's where we are, and so we look at all sorts of data: growth rate, inflation, capacity utilization, etc., and some Moody's indicators, or even some, no, not Moody's, but Google frequency indicators. So traffic, the frequency that people visit the groceries and the drugstores, etc. How often do they get out of their houses? There are now this kind of indicators that we look at, okay, when we make a decision.
Well, you have, I understand, 2 policy meetings this quarter. Could there be a cut in either one of those?
I cannot say that. We'll, as I said, we have to look at the data at the time that we make the decision.
Okay. Well, one other policy tool is the reserve requirement of banks. You've cut them by 200 basis points. How will cuts look like? What's the trajectory of cuts for this year in terms of bank reserve requirement?
As I said, when I assumed office, I made a promise that we will cut the reserve requirement from, at that time, 18% to single digit by the end of my term, which is 2023. And so we have already cut it by 600 basis points or 6 percentage points from 18 to 12. Now, whether we will cut further will depend on whether there is still need for more liquidity. But at the moment, there's ample liquidity, so I don't see any need for additional cut in the reserve requirement at this time. Maybe things will change once the economy starts recovering, and as the speed of recovery, we may consider additional cut in the reserve requirement.
Just a last question, Governor. Yes, you said you're a fiscal guy at heart. You were the budget chief of 3 presidents.
Right.
I suppose you've discussed the fiscal matters with fiscal authorities. Where lies the problem we've gone back to chronic underspending. During your time in 2018, for instance, you were talking to the 5 biggest spenders among the departments to make sure that every quarter to make sure that they spend on time. So where's the problem now?
Well, I think that question should be addressed to the present budget secretary. I've done my job when I was there. Okay.
Okay. We've run out of time, Governor. Maybe you can leave our audience with a message.
All right, please allow me to emphasize that all our actions at the BSP are ultimately aimed at enhancing the economic and financial well-being of all Filipinos. At the very core, this is our strategic objective of bringing the BSP closer to the Filipino people. We continue to closely monitor economic developments and financial conditions, and we stand ready to fully employ monetary instruments in our toolkit. We remain committed in supporting whole-of-nation efforts, public, private, national government, local government, to address the adverse economic impact of the pandemic. We also assure the public that there will be a gradual unwinding or disengagement of the policy initiatives we have implemented, and understand the importance of facilitating a smooth normalization of these time-bound measures. Please allow me to also highlight the BSP's efforts to ensure its sustained adherence to disciplined and evidence-based policymaking. We're actively bolstering the economy's capacity to bounce back from this health crisis by pursuing our mandate of fostering price and stability conducive to sustainable growth and employment. Indeed, every crisis is an opportunity to show the world what we can endure and what we are capable of. Our history is a solid testament to our grit and perseverance as a people, and COVID-19 has given us yet another chance to work together in ensuring that our economy or our country will sustain a stable recovery from this pandemic. Thank you very much.
Thank you, Governor. It was a privilege. That's it for our first virtual interview for 2021. Please watch out for succeeding sessions and join us for those discussions. Till then, thank you and have a good day, everyone.